Ryan Issakainen, why should an investor want to buy a technology dividend ETF? It almost sounds like a paradox.
Right, and I think up till about 5 years ago, the fact that technology companies were paying dividends was a paradox. They didn't pay dividends. It's only been over the last 5 or 6 years that we've seen this trend of tech companies paying dividends. And today, the technology sector actually represents the largest contributor to the overall dividends for the S&P 500. And at the same time, those tech stocks aren't found in most equity income ETFs. So our ETF I look at as a good way for investors to gain technology exposure within their equity income strategy.
Some of the larger holdings in your ETF are classic tech names, IBM, Microsoft, Intel. They are paying dividends around 2.5%, 3%. But does that mean there's no growth left in these lumbering tech giants?
You know, I don't think so. I think that there's more opportunity for growth than some might think. If you look at, for example, the free cash flow that these companies are generating, it's about 3 times what they're paying out in dividends. So there's, I think, plenty of room for dividend growth. There's also room for capital appreciation. You know, they're not going to grow at 30% rates, but at the same time, they've got cloud computing businesses that they're all working on. They've got different avenues for growth. So they're more mature companies. They've got very low debt ratios, they've got a lot of cash, and they're going to continue increasing dividends in our view.
What's the dividend of your fund, and what do you expect to be maybe next year?
The dividend today is just over 3%, and the rate of growth over the last 3 years has been between 20 and 30% for the underlying holdings. And so, you know, I don't see that rate necessarily slowing down, especially as investors really have this appetite for income and for yield. And so I think the technology companies are responding to that.
And do you expect new tech companies like Facebook to start paying a dividend earlier, to follow in the footsteps of some of these larger established tech companies?
You know, in the case of Facebook, I wouldn't anticipate a company like that takes a lot of its earnings and reinvests them in research and development and really expansion to pay a dividend in the near future. At some point they will, but I think that's actually good for those companies. If they've got better growth opportunities than just paying out cash distribution in the form of a dividend, then they should reinvest in the best interest of their shareholders. But you know, in the case of a company like Apple, which just instituted its dividend policy last year, they've got so much cash and they don't need to take all that cash and reinvest it in you know, research and development. And so you know, certain companies we don't expect to pay a dividend or much of a dividend anytime soon, but other tech companies, the more mature companies, we do expect to continue raising dividends.
Thanks a lot.
Thank you.